This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on November the 2nd, 2012. Our time is 8:44 Mountain, 10:44 Eastern. Radio show runs on AM 640 in Toronto, 630 CHED Edmonton, QR 77 in Calgary. If you ever miss a radio show, they are archived on Harold's websites, rarecoloreddiamonds.com and HESradio.com. We also have a free podcast through iTunes. Download iTunes free of charge. Get it on your computer, your smartphone. You can take us anywhere. The radio show is portable. Quick note for those listening in Calgary. Next Sunday, we are normally on at 4 o'clock. We are going to be on at 11 a.m. as the Calgary Stampeders are playing in the West semifinal. Now, for those in Edmonton, we know the Eskimos are in the playoffs. We just don't know when they are playing. So stay tuned. We will keep you up to date on that. So once again, in Calgary, next week, 11 a.m. in Edmonton, our time. Normally we're on Sunday afternoon. We will announce when we're on. We will let you know. As well, Worldwide Precious Metals, the company Harold recommends you use when it comes to investing in gold and silver, platinum, palladium. They're going to be in Calgary the week of November the 12th. They would be happy to meet with you, no obligation, free of charge, educate you about hard assets. And if you would like to connect with them, wwpmc.com, the website, 1-866-623-2002 is their telephone number, and you'll have a chance to meet with them. No obligation, meet and greet in Calgary the week of November the 12th. Harold, that's the housekeeping out of the way. What a week it was. Hurricane Sandy, absolute devastation in New Jersey and New York. It was a quiet week on the markets. Monday, Tuesday, the markets were closed. An election next week in the United States, too close to call. On the seasonality side of things for gold and silver, we're getting to that point where seasonality is very strong, and we'll talk about that as well. The jobs numbers in the United States came out. Not a great number again. In fact, the unemployment rate went up to 7.9%. The United States, the citizens of the United States have a big choice next Tuesday. And I have a weird suspicion here, Harold, that we could have another Al Gore and George Bush scenario where this could go on for weeks as they count and recount, trying to figure out exactly who the next president of the United States will be.
I think you're right, Randy. It is that close, and it's going to be very interesting to see what happens. And you're also right. What a week. Unbelievable. Our hearts go out to everybody on the northeast coast of the United States that got hammered by Hurricane Sandy. A storm that was only a Category 1, meaning winds under 100 miles an hour. Living in Florida, I've been through Hurricane Andrew, which is a Category 5, and it was much more severe as far as wind strength, but the disaster and the damage that was done by Sandy is just unbelievable. And again, our hearts go out to everybody who's suffering up in the Northeast. The fact is that it was a very, very light trading day because nobody could get to the trading floors. For the first time ever, the New York Stock Exchange was closed for 2 days in a row, and they had to open it up because at the end of the month there was expiration of contracts, and they had to get in to settle the markets. Otherwise, it would have been a disaster. So they did get in, but very, very limited trading, very light. Most of the traders couldn't even get to the trading floor, and the same thing in commodities. Again, nobody could get through the streets, and the mercantile exchange was closed where gold and silver and oil and other commodities trade. So it's just an absolute mess. You know, the thing is that the damage caused by this is so astronomical. They're saying $20 billion in actual damage and $30 billion in lost business. $50 billion, a lot of it to New Jersey, which is a bankrupt state. There's 3 major states in the United States that are bankrupt. 1 is California, 2 is Illinois, and 3 is New Jersey. So what you're actually going to see here is a quantitative easing Sandy type of thing because they need to raise $50 billion and raise it very, very quickly. The economy is in a horrible situation. New Jersey is bankrupt. Again, the Fed's going to have to print a lot of money to get New York back on track. And the fact is that New Yorkers are very resilient. They're hard workers. They'll get things going as quickly as possible. But if you saw what happened with the subway systems, there was 10 feet of water, and all the debris went down into the subway system. So 10 million people a day travel on the transit systems in New York, and that's basically almost totally shut down. The other thing is 2,000 flights were canceled. 2,000 flights, if you do the math, that's in the billions of dollars, and that's money that the airlines will never, ever get back. The other thing, don't buy insurance stocks. Look what happened in the United States this year, disaster-wise. You had the fires in California and in Colorado. You had the worst drought since the 80s that caused over $10 billion worth of damage, and now you've got Hurricane Sandy, which is going to cause about $50 billion worth of damage. Again, just an absolutely horrible situation, and it just goes to show you the wrath of Mother Nature. The other thing is that the election is coming up next week, next Tuesday, and it sort of coincides with the seasonal trade in gold and silver. You know, the thing is that we've talked the last few weeks about gold and silver markets falling, and we did say that because of the seasonality and the elections coming up, that we would see more extreme moves in the market than should actually happen. There's nothing bearish about the gold and silver and oil markets, I can assure you that, but the closer we get to the elections next Tuesday, again, these markets tend to react, and it's crazy and funny how these markets will do what they're going to do just prior to the elections coming. For example, the price of gold and silver came down to where gold broke $1,700 today as we're taping the show on Friday. We're basically trading right now at around the 1650 level. So again, we feel that now that gold has broken through the 1700 level, it could go to 1650. The low that I see in the market is 1600 if they want to just bring the market down, the last week of seasonality. By the way, if you look back at the charts, this happens almost every single year. The markets tend to fall in October, and then around the middle of November is when these markets start to pick back up again. November, December, January, February are 4 extremely heavy months on the upside for gold and silver and oil. So again, it's not unusual that this market would come down at this particular point, but it seems to be more reinforced because there's very few traders, so the trading volume is extremely light and the moves are more exaggerated. So again, we're extremely bullish on gold and silver. We're very, very bullish on oil. And again, we knew that they would try to bring down the oil market just prior to the elections because look how high oil was just a few weeks ago. In actual fact, in California, they had record gasoline prices, and again, prior to the election, because President Obama does want to get reelected, they bring down the price of oil. In no way, shape, or form is that reflective of the market. And don't forget, OPEC, which is the Organization of Petroleum Exporting Countries, will never let oil markets fall much lower than where they are right now. So again, everything is exaggerated this week because of the elections, because of the light volume in the market, and because of the hurricane. And that's basically what's going on in those markets at this point. Again, we're going to get an opportunity to buy gold and silver and oil at a phenomenal price next week, and I would very, very heavily recommend that you get into these markets. There is so much danger out there in the markets right now, and the fact is that the Federal Reserve here in the United States is printing money like it's going out of style, and now that the Hurricane Sandy has hit and they're calculating what the damage is, they're going to have to print even more money, another $50 billion at least. So this is what's going on in the marketplace at this point here. Again, this week is not a true representation of what's going to happen in the market, but what it is going to do is give you a tremendous opportunity to get into these markets at very good prices. I think before this whole thing is over, by next week, we will see if silver breaks 30, could go to $28, and that's an excellent entry level to buy silver at $28. The gold market, the same thing. If we can buy it at 16 to 16 and a quarter, I would be a heavy, heavy buyer of gold, and oil in the $85, $86 level is a tremendous buy. We believe that oil over the next 2 years will be a $200 commodity. There's tremendous, tremendous danger out there, and the major thing that we need to be concerned about is inflation. Inflation is what's really going to hit us and hit us hard over the next 4 to 5 years. And again, as far as I'm concerned, it's a given. When you print as much money as the Federal Reserve is printing, it weakens the U.S. dollar. And as the U.S. dollar continues to weaken, gold and silver prices will continue to climb because there is a direct correlation between gold and silver and the U.S. dollar. As the U.S. dollar falls, gold and silver will rise. Again, what we feel is going to happen is that we're going to see massive inflation due to a very, very weak currency, not only in the United States, but also in Europe. The situation in Europe is not getting any better. The sovereign debt situation is horrendous, and we are going to continue to see the same problems that Europe is having will continue. They really haven't solved any problems at this particular point, and again, Spain, Italy, both need bailouts, as does Greece, and you're talking massive amounts of money, and that money is just not available. So basically what we are going to see is massive inflation coming forward, and that's what we really need to invest towards, because when it does hit, it'll be like a freight train. You'll never be able to stop it. It'll be the highest inflation that we've ever seen, and back in 1979 and 80, we had massive inflation, where inflation went into the double digits, and gold went to $850, and we also saw oil prices extremely high, silver prices high, and we had interest rates all the way up to 22%. We are going to see a repeat of that. And again, the situations are getting so severe in the markets worldwide that it's not that far away. When you get the newsletter this week, even though it was a short week, it's still jammed and loaded with key and very important information. If you look under the gold section, there's some articles and a chart that you've got to look at that is so important. You know, it's what's happening, and we've talked about this for years now, that what's happening with the derivatives market. The derivatives market is a market that is so misunderstood, most people don't even know how to trade it, and the fact is, it's a disaster waiting to happen. And it's an unregulated market, means that these banks and brokerage firms and whatever use these derivatives, and here's what they're saying about it. If this doesn't scare the life out of us, I don't know what will. It's a chart of the week, and they say one of the most important charts ever, the real over-the-counter derivatives outstanding worldwide, and listen to this number, is at least 1.1 quadrillion. Have we even heard of a number like that? 1.1 quadrillion. And the major part of it is worthless. People have no idea what kind of turmoil and destruction this can cause in the global financial system. Readers need to understand that this is a global economy, that as the global economy edges closer and closer to collapse, the earthquakes in the financial system will become so enormous that it will eventually overwhelm politicians and general planners. This is why it's so important to protect yourself with hard assets, gold, silver, diamonds, because the banking system as we know it could absolutely crumble with this derivatives disaster. And by the way, if you don't think that that could happen, all you have to do is go back to 2008 when we had a similar situation with Lehman Brothers, and they almost destroyed the financial markets as we know it. There was almost a run of over $4 trillion on the money markets. People were lined up at U.S. banks to take their money out of the banks because they didn't trust the banking system anymore. That was in 2008, and the fact is that if the FDIC, the insurance company that guarantees bank accounts, if they didn't raise the insurance from $100,000 to $250,000, we would have seen the financial markets as we know them pretty well collapse. I've always felt that this derivatives market was going to be even worse than the Lehman situation, if that's possible. And now when you see the numbers, $1.1 quadrillion in the derivatives market, and most of that is worthless. Friends, ladies and gentlemen that listen to our radio show and follow us for the last 11 years, the fact is that we are heading into the most difficult and dangerous times that we have ever seen. And if you sit there and do absolutely nothing, the chances are that you're going to lose a major part of your money. If you have most of your money sitting in stocks at this particular point, I would strongly recommend that you get out of them. Even put them into cash at this point, because the danger at the end of the year is extremely severe. In the United States, and if you're trading anything on the Dow in the United States, you've got to be careful about what's going to happen at the end of the year when this fiscal cliff happens. What's really going to happen is that these Bush tax credits are going to expire, and you're going to see the capital gains skyrocket. It's actually going to go from 15 to 25 to 30%, and people will be selling out of the stock market like it's going out of style, because there's no benefit anymore to keeping your money in the stock market long term if you're going to be charged short-term rates. So again, This could be a disaster at the end of the year, and there's no reason in the world that you want to put yourself in that situation. You're better off to be safe than sorry. And again, what I'd prefer to see you do is that if you have stocks in the market, mutual funds, that type of thing, go on the sidelines. There's not a chance at this particular point that we're going to see any major rally in the stock markets. You're not going to be missing anything, but this market could fall like it did in 2008 when it dropped from 14,000 down to 6,500. Again, I cannot explain enough how dangerous this situation is. With this fiscal cliff happening at the end of the year, this derivative situation out of hand and most of it worthless, and the fact is extremely high inflation is coming, you've got to get into gold and silver and diamonds. Those are the three areas that are going to protect you. If you believe in insurance on your car, your home, your life, and all that, get insurance on your investment situations, on your money. Buy something that's going to offset inflation and all the things that we just talked about today. Again, we're coming very close. The election is next week in the United States. It really doesn't matter who gets in. The fact is that the United States is in huge financial situations, big trouble, and this derivative market could bring inflation to a level that we have never ever seen before. If you invest in gold and silver and diamonds, and are diversified in different areas, we're going to get through these difficult times. We've been dead on the markets for the last 11 years, and again, I think that for us, the best is yet to come as long as we do the right thing. For those that have been on the sidelines waiting to buy gold and silver, by next week, right after the elections, is the time to start to buy it. The diamond market is on fire, skyrocketing in price. That's another market we brought to you. We'll talk about that later on in the show. But again, at this particular point, we are looking at some serious situations coming up at the end of this year, which is only 2 months away. Please do the right thing and get some hard assets into your portfolio to protect you. We work way too hard to lose our money in these markets at this particular time.
Speak with Worldwide Precious Metals. The company Harold recommends you use, a Canadian company in business for over 10 years. Connect with them, 1-866-623-2002. Their website, wwpmc.com, wwpmc.com, 1-866-623-2002. Let them earn your business. Educate you about the hard asset market. If you are in Calgary, would like to meet with them personally, no obligation, a meet and greet. They are going to be there the week of November the 12th, and give them a call. You can email them via their website, connect with them for a no obligation meet and greet. Let them educate you about these hard asset markets and why it's so critical you have that in your portfolio today. One thing I wanted to get to before we talk about seasonality, and this sort of goes to what Harold was talking about with the fiscal cliff. The United States is nearing its debt ceiling again. The Treasury Department warned this week the federal government will probably hit its $16.4 trillion borrowing limit by the end of the year, adding more urgency to efforts to avoid the fiscal cliff. The national's debt is actually looming, and this is actually going to be a situation where it threatens an already sputtering recovery. The Treasury Department said Wednesday that the U.S. will probably hit its $16.4 trillion borrowing limit by the end of the year, at the same time that Congress is grappling with the automatic tax hikes and large government spending cuts scheduled to kick in Jan 1. It adds to the cauldron of the dark brew, says Mark Zandi. He's the chief economist at Moody's. He said of the fast-approaching debt limit, that makes the disaster even more disastrous. Another reason to protect yourself. You can't count on politicians in the United States to do the right thing, especially when they're so polarized. Protect yourself. Speak with Worldwide Precious Metals. Get yourself an allocation of precious metals in your portfolio today. Start your own precious metals investment account, 1-866-623-2002. The website, wwpmc.com. And another reason to take a hard look at it is gold seasonality. and get our newsletter, because we have charts in there on gold seasonality. The other chart that Harold touched on regarding gold and also all the derivatives is in our newsletter. Worldwide will be happy to send it out to you via email free of charge every week. Connect with them. wwpmc.com, 1-866-623-2002. What we're talking about, gold seasonality as per the gold seasonality chart and table we have in our newsletter. The 5-year average from 2007 to 2011 saw returns of 5.6%, and the 10-year average from 2002 to 2011 saw returns of 5.1%. Gold's outperformance in November is significant. The 10-year average of data shows that September will be the next strongest month with 2.6%. Then came August at 2.3% and January at 2.2%. The 5-year average shows that February was the next strongest month at 3.7. Then came September at 3, January at 2.2. Interestingly, November, the maximum gain over the 5 to 10-year period was a 12.9% gain seen in November 2008. The month U.S. President Obama was elected. Obviously, history never repeats exactly the same, but it does repeat. And obviously, we do expect that in November, gold and silver will outperform once again. Speak with Worldwide about gold seasonality, the gold to silver ratio. They're the experts in this very specialized field. Speak with them. If you're in Calgary, they'll be happy to meet with you. 1-866-623-2002. Their website, wwpmc.com. Harold, those charts, the seasonality charts and the chart on gold and the derivatives must see into information, and we really encourage people to get our newsletter this week.
You bet. You did a great job, again, with very limited information this week because the markets were closed for those 2 days, and again, really not a lot was happening. But again, all the news that's coming out is extremely concerning, and we're getting very close to crunch time. It's time to make a decision whether you're going to do what you need to do or you're going to just sit back and just let the markets do their thing. Again, to me, we need to be proactive because we're hard workers. We may not be the Warren Buffetts of the world sitting with billions of dollars, which I wouldn't really want to be at this particular point, because where do you put that money? But the bottom line is that there's serious situations happening that we can do very well with. All we have to do is pull the trigger. You need to be in the physical gold and silver market, own the market outright, gold and silver physically, and again, the diamond markets also are going to hedge you against inflation. Inflation is going to be the number one money maker for us, but the thing is that inflation can kill the economy, and if you're not prepared for it and the price of oil and food skyrockets as dollars are falling, you're just not going to be able to deal with it. Your income is going to drop, your spending power is going to drop, and again, there's no reason for that. We've been through this before. I've traded these markets for over 35 years, and I know what inflation does, and I know that inflation is coming because, again, I've seen it in 79 and 80. So what we need to do is we need to get out of or reduce your position in the paper asset market, and you need to get some physical gold and silver. They will react to inflation better than almost anything. And then diamonds, they went up 500% in 1979 and 80 with inflation. So that's your avenue to go, and that's what we're going to help you with, and we're going to get through these difficult times and hopefully make an awful lot of money.
1-866-623-2002 to educate yourself about investing in gold and silver. wwpmc.com is the website. Remember that Worldwide Precious Metals, the company Harold recommends you use when it comes to investing in gold and silver, platinum, palladium, will be in Calgary, November the 12th. And it's a meet and greet, no obligation, just an opportunity to meet them, let them earn your business, or even just sit down and have a beverage and talk about the markets. Connect with them, 1-866-623-2002, the website, wwpmc.com. It was a great week for diamonds. We'll come back and talk about it as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on November the 2nd, 2012. Our time is 9:09 Mountain, 11:09 Eastern. The radio show runs AM 640 in Toronto, also 630 CHED in Edmonton, QR 77 in Calgary. A little housekeeping. Our radio show in Calgary normally on at 4 o'clock on Sundays due to Stampeder football. They are in the Western semifinal. They will be on in the afternoon. That means we're moving to the morning. So Sunday, November the 11th, Remembrance Day, we will be on at 11 a.m. And here in Edmonton, the Eskimos have made the playoffs due to Toronto beating Hamilton last night. We do not know, as things stand, as we tape this show, if the Eskimos will be playing in the East semifinal or the West semifinal. We will have to wait and see, and when we do know, when our radio show is on, we will pass that on to you. So there's our housekeeping. Don't forget, if you are in Calgary, Worldwide Precious Metals stopping by to meet you. They will be happy to connect with you. They're having a meet and greet, no obligations, just a opportunity to meet them and speak with them about these hard asset markets. You connect with them at 1-866-623-2002 to set up a time to have a meet and greet, 1-866-623-2002. Their website is wwpmc.com. Harold's website for diamonds is rarecoloreddiamonds.com, rarecoloreddiamonds.com. And this week, Harold has mentioned he's doing a major seminar, and he'll talk about it here shortly. But I went back over the last year of all the newsletters we've done, and I picked out all the auction results that we've had over the last year. And if you would like to get those from Harold, he would be happy to send those out to you. We have them all on one file, and we can send them out to you. You can see all the auction results from Christie's, Sotheby's over the last year. We'll be happy to send them to you. Harold is preparing for his major seminar, which he'll talk about a little later. RareColoredDiamonds.com, the website, featured diamond of the week. This is a stunning diamond, a 3.0 carat hard-cut, fancy, intense, yellow, internally flawless diamond. This is absolutely stunning. You can see the video on the website, RareColoredDiamonds.com, under Featured Diamond of the Week. Picture of it in our newsletter, a link to the video in our newsletter as well. We included this week two stories, actually, one from the Wall Street Journal. The new color of luxury is yellow. They talk about yellow diamonds and very bullish on yellow diamonds. Also, yellow diamonds are a girl's best friend. Some great pictures of yellow diamonds from the Journal. And this week, there was a story about Singapore and how over in Singapore, they did show a 110-carat yellow dragon diamond valued at $11 to $15 million. And people in Singapore are becoming very, very interested in investing in diamonds, colored diamonds in particular. Harold, it's great to see this worldwide market, and you really started it all with colored diamonds and investing in diamonds. It's great to see the seeds that you've sown spread out all around the world now, and everyone is really starting to take a look at this seriously as a great alternative asset.
I got to tell you, Randy, sometimes I just shake my head and said, what in the world did we start here? I'm so proud of it. The fact is that the diamond market is on fire. And the yellow diamond market, we built a magnificent diamond ring for a very good client of ours, made of some of the rarest vivid yellow diamonds in the world. And we made a ring that that was so popular and so amazing, they got picked up by 357 news agencies all around the world. Diamonds are big, big news now. The thing is that the press release that came out on my diamond also coincided the same day. It's amazing how it happened with those two major articles on yellow diamonds from the Wall Street Journal on the new color of luxury and diamonds are a girl's best friend. Both of those articles came out the exact same time as my press release came out worldwide on that massive diamond ring that we sold that was a one-of-a-kind that is so spectacular that it has its own website. The yellow diamond market is on fire, and the fact is that the featured diamond this week is one of the most beautiful diamonds that you'll ever see. It's over 3 carats. It's an extremely rare heart-shaped diamond. It's fancy, intense yellow, and it's internally flawless. A diamond like this is a one-of-a-kind. Very, very seldom will you ever see a diamond like this, especially over 3 carats and in a heart shape. It's one of my favorite diamonds, and it will absolutely take your breath away. The thing is that these larger yellow diamonds are taking on a life of their own, and they're going up tremendously in value. I've never been happier with the returns that I'm seeing on Argyle pinks and yellow flawlesses for our clients. So again, this is an extremely exciting situation for those of you that have the wherewithal that Heart Diamond is one of the most beautiful diamonds, and it's a diamond that will do nothing but make money. We love the yellow diamond market. Our diamonds are from South Africa and from South America. They're of very, very high quality. Be very careful out there, because there are firms that are carrying yellow diamonds that are from India, and they're of extremely poor quality. They're about half the price of our diamonds. And the fact is that they have no shine to them, and they show a lot of carbon, and they're not considered investment diamonds. So again, when you're looking for yellow flawless diamonds, there are no deals out there at this particular point. The fact is that the price of these diamonds are going up. So anytime that you see a cheap price on a diamond like a yellow flawless, you got to look a little bit sideways on it. And again, you have to know what you're buying. And it's not always the price that is the most important thing. It's the color of the diamond. And there are these Indian yellow diamonds that, even though the GIA grades them as flawless, you'll be able to see that when you see the pictures of them or you see the diamond in person, that it's not the diamond that you want. You get what you pay for, especially in this business. And the fact is that these diamonds are going up in value, not down in value. So be very, very careful of that. I don't want you to be confused about that. There's a lot of people out there, a lot of firms that are starting to get into the rare color diamond market, and they really don't know what they're doing. So be very, very careful. We only want our clients to make money. And again, it's the high quality diamonds from South Africa and from South America that you want to own, not the Indian diamonds that are of way less quality and about half the price of the ones that we're offering to our clients. The other thing is that you have to be able to sell these diamonds. And we own H. Siegel Fine Auctions, and it's the only live real-time auction site that will sell colored diamonds and emeralds, rubies, and sapphires and other collectibles. So we built that for our clients, and again, we're excited to bring our next auction. We delayed it for about a month because we are getting our catalog together, and we will announce when that's going to happen. Also, as Randy mentioned, we're doing a private seminar in Denver at the Ritz-Carlton coming up in November. It's going to be streamed live all over the world. It's one of the most exciting things that is happening. And again, you'll be able to see it. I'll be able to, next week, contact everybody through emails and through the radio show and let you know what the coordinates would be so you can view our live seminar. It's going to be spectacular, and it's all going to be on diamonds. Yellow flawless diamonds are going up in price like crazy, and they're being written up right now. They have to be flawless, and they have to be high quality, and we have beautiful yellow flawless diamonds, fancy light yellows, which are like canary diamonds, fancy yellows, fancy intense, and fancy vivids, and again, all of them are going up in price substantially. They increase by 25% a year. They double every 4 years, but during times of high inflation, like 79 and 80, these diamonds went up 500% in 2 years. Just doing the math, you buy a diamond for $20,000, and if we get the inflation that we're going to get in the next 5 years, the diamond could be worth $100,000. We want you to invest in our diamonds, and then we want to be able to sell the diamonds for you. That's how we make our money. We get 10% of the profits, so we look to do a great job for our clients. If you look in the financial news, all you're going to hear about is Argyles at this point. Argyle pinks are skyrocketing in price. The tender was just over. The prices were astronomical, and the fact is that the mine is going to close within the next 5 or 6 years. So it's not that long term of an investment. You invest in Argyle pink diamonds, and you put them away till the mine closes, give it 2 years for all the diamonds to run out, and we believe you'll see 10 times return on your Argyle pinks. Now, the prices of Argyle pinks are starting to rise. They increase by at least 25% a year. Some are doubling every 2 years, like the Vivid Argyles. They're becoming very, very, very difficult to get. But anytime you buy the very best, you always get the most back for it. Argyle pinks are going to continue to skyrocket in price, and the closer we get to the mine closing down is when you're going to start to see these diamonds go up 100% a year, just like they did back in 1979 and 80. So again, we're extremely excited about what's happening in the diamond market. The other market that we recommend in diamonds is a very specific market. It's the D-flawless white market. Now, D-flawless whites, D means colorless. It's the best color that you can get in a white diamond. Flawless is flawless. And again, what you want to own in those are the round, brilliant, deep flawless triple X diamonds. They're extremely, extremely rare. They actually increase in price by 45% a year, and they did last year, and they have never, ever fallen in price. In fact, they're so rare that they are just almost used as a currency. So the thing is with these diamonds, you want to own them between 1 and 5 carats, and they go up tremendously in value. And I do have these type of diamonds. They actually represent 0.001% of the market. That's how rare these diamonds are. D flawless triple X. I even have some of the type 2A diamonds, which are so rare that you can see completely through them. There's no nitrogen in them whatsoever. So again, we have the finest of diamonds. We want you to invest in the diamond market because they'll hedge you against inflation. It's an asset that never ever drops in price, and it can make you a tremendous amount of money. On top of that, they're portable private wealth. That means that the Europeans call it real estate in your pocket. You could literally walk around with $1 million diamond in your pocket and nobody would even know it. Most of our clients invest under $100,000. We have diamonds starting at $15,000 and going all the way up to over $50 million for an individual diamond. Most of our clients invest under $100,000, with the most popular diamonds, the yellow flawlesses in the $20,000 to $30,000 range, and the argyle pinks in the $30,000 to $50,000 range. And now these deep flawless whites are anywhere from $10,000 to $40,000, $50,000 to $100,000 and up, depending on the size. I've got a 22 karat round brilliant deep flawless triple X diamond worth in the range of about $7 million. So again, we have these diamonds. These are diamonds that are used as actual currency in Europe, and again, just one of the most amazing assets that you could ever own. So with everything going on, with this derivatives explosion that could happen at almost any time, with the elections coming up, with inflation, the number one thing that we need to be concerned about, you want to own physical gold, physical silver, and physical diamonds. You want to own argyle pinks. They could make 8 to 10 times return for you over the next 10 years. You want to own yellow flawlesses. They went up 500% in 1979 and 80 with high inflation. They've got to be the high-quality yellows, not the cheap ones that are out there on other people's websites. And then you also want to own these D-flawless white triple X. That means triple excellent in every category. It's not what some people may think. And these are just absolutely spectacular diamonds that when you see them will take your breath away. Randy, I've never been more excited about anything that we've done before. The diamond market is on fire, and most of my clients are in that market at this time.
Well, it is exciting. Back in 2005, August, you wrote that report on colored diamonds, and you planted the seeds here in Canada, and they're spreading out all over the world. But as you stated, you need to deal with people who are experts in this field like yourself, who have the connections, have the best pricing, the best diamonds, and obviously the ability to sell those diamonds down the road when the time is appropriate. But speak with Harold about the featured diamond of the week. We had a pink diamond similar to this. Now we have a yellow diamond. It's a 3-carat, heart-cut, fancy intense, yellow internally flawless diamond. It's heart-shaped. It's absolutely stunning. And if you want to learn more about yellow diamonds, speak with Harold, but get the Wall Street Journal articles in our newsletter from Harold. They were from a couple of weeks back, and the Wall Street Journal did a story, The New Color of Luxury, Yellow, and as well, Diamonds Are a Girl's Best Friend. Yellow diamonds are a girl's best friend. Picture of Marilyn Monroe with a yellow diamond. And the story out of Singapore is just very, very exciting because we're starting to see people look at colored diamonds as an alternative investment class. This is something that Harold built back 7 years ago, and we're starting to see it spread all around the world. Harold, it is an exciting time because the truth is, if you look at what's happening over in the UK and even in Europe in general, they're having serious financial troubles. And it's interesting to note that the unemployment rate in the Eurozone More than 1 in 4 people are out of work in Greece and Spain. The jobless rate is 11.6%, and you have a youth employment problem there as well. The unemployment rate for those under 25 is around 24 to 25%. So you take a look at what's happening in the United States, around the world. The loose monetary policy that is driving hard assets will continue for many, many years. And this storm, Hurricane Sandy, the United States is going to have to spend billions and billions of dollars to repair the damage, and that is obviously going to be printed money. They don't have it. They'll have to borrow it, or they'll have to print it. Once again, it's a situation where hard assets will continue to do well in the years to come.
You better believe it, Randy, and it's never, ever been more important than it is right now. So, again, when it comes to investing in diamonds, by the way, it's not a short-term investment. To buy a diamond today and sell it a year from now, it's not going to benefit you in any way. You want to hold on to them for at least 5 years, especially with the inflation coming. And we know that the Federal Reserve in the United States has come out with their game plan. They said they're going to keep interest rates at 0 for the next 3 to 4 years, and then they're going to have to reinflate the economy. As they reinflate the economy, they're going to have to raise interest rates. And as inflation just continues to skyrocket, as it did in 1979 and 80, there's very, very few assets that will actually increase in value and protect you against inflation. One of them is diamonds. Diamonds in 1979 and 80, when gold made their highs and silver made their highs, went up 500% in just those 2 years. So, again, if you are going to invest in diamonds, and it's not for everybody, they're expensive. The minimum account is $15,000, and then it goes up from there. So, again, you want to own these diamonds specifically because of inflation and what's going to happen over the next 5 to 10 years. What's also going to happen is that Argyle Mine is going to close down, and they produce over 90% of the world's pink diamonds. So if you're going to invest in Argyle pinks, you want to hold on to them until the mine closes down to give yourself the maximum return on your invested dollar. Don't cut yourself short. So again, this is a very, very exciting time. These deep flawless whites, I'm telling you, are extremely strong investments, and we're about the only firm that has them. They're extremely, extremely difficult to get. The yellow flawlesses are magnificent, and again, they're fabulous investments. So between the three, the high-end yellow flawlesses, the Argyle pinks, and the deep flawless whites is what's going to get us to the dance, and we're just going to do fine in the financial markets as long as we remain extremely conservative, we don't leverage anything heavily, and we don't take any unnecessary risks. We're going to be in phenomenal shape.
Well, it was interesting this week. The German finance minister Wolfgang Schäuble said Tuesday that the worst is yet to come. Europe's debt crisis seems to be entering a calm phase, but that's only an illusion. The worst is probably yet to come, he warned. The financial markets have been notably calm of late. Stock indices have ticked upward, and interest rates on sovereign bonds have drifted downwards. But he is saying that the worst is yet to come. None of the problems have been solved. In fact, keep an eye out for this. Greece delayed their austerity vote, and they are actually warning of chaos. The Greek coalition delayed actually austerity votes, and the PM is warning of chaos. The Greek coalition government will delay a vote on major new austerity measures by another week, and there's a lot of pressure in Greece. So I know sometimes these things slide off the radar, and everyone thinks, oh, okay, Greece is fixed, it's all right. They haven't fixed anything. The truth of the matter is it's bubbling, it's still there, and it hasn't been fixed, and it will come back as it always has, and it will wreak havoc. And you have the Prime Minister of Greece saying there could be chaos. And you have the German finance minister saying that the debt crisis, sure, people think it's entered a calm phase, but the worst is yet to come. And there was an interesting quote this week from Robert Fitzwilson, who's been in the investment business for 40 years. He said, "Listen to common sense and your own instincts. Be prepared for this global financial mess to take more time than you think. We are many magnitudes away from the ultimate resolution of this tragic financial soap opera. Know that only a small percentage of investors are focused on this form of wealth preservation." He's talking hard assets. So wise investors should continue to accumulate gold and silver. And obviously, Harold, we advocate taking a hard look at diamonds as well. And I couldn't agree more with that comment. He's absolutely right. Listen to your common sense. Listen to your own instincts. We have about 6 minutes left in our show here. Next week in the United States, they're going to the polls. Some people say if Obama gets elected, gold is going to fly. I don't see it being any different if Mitt Romney's elected. I don't really see anything changing there either. So now is the time to stay focused, have a game plan, stick to it, and know that you are protected in your portfolio by hard assets.
You bet. Again, it's been proven in history before, and again, if you don't learn from history, history always repeats itself. We've been through this before, but this is much more extreme, and it's going to catch a lot of people off guard. This is just, a radio show that's been in Canada for 11 years now, and it's on the internet, and it does go worldwide. But again, most of our clients are Canadians, as am I, as is Randy, and again, we just want to make certain that we get through these difficult times, and again, if we can make some money doing so at the same time, that's even better. I've been through this before. I've traded these markets for over 35 years, so I've got the experience in them. Gold and silver and diamonds is what's going to move, and it's going to protect us against inflation like we have never, ever seen before.
One of the stories, and we haven't really focused on it, it is very important, though, and we'll tell you about it here in a second, but to invest in precious metals, connect with Worldwide Precious Metals. That's the company Harold recommends you use. They're a Canadian company out of Vancouver, been in business over 10 years. They're the experts in this very specialized field, been in the market the entire time this bull run has taken place. They've been through all the ups and downs. They're the experts. Speak with them. 1-866-623-2002. Their website is wwpmc.com. Don't forget, if you live in Calgary, they will be in Calgary the week of November the 12th, and you can speak with them about meeting, have a meet and greet, and no obligation. Sit down with them and talk about the hard asset market and let them educate you. Let them earn your business. On the diamond side, rarecoloreddiamonds.com. You can speak with Harold at 1-800-432-1022. But the one item I wanted to touch on, a German court ruled that Germany has to do an audit of their gold. And it's actually stirred up quite a hornet's nest. We had a lot of information last week in our newsletter about it, and we have quite a bit of information this week in our newsletter as well. There are some people who believe that Germany does not have the gold that they maintain they do. This court has ordered the German government to do an audit. They are working with those around the world where the gold is stored to do a count, and those that obviously believe that the gold is not there think gold prices could go substantially higher if it is proven to be correct. And this is something, it's been a big story, Harold, and we haven't really mentioned it, but I thought it would be worth mentioning today because it's a story that continues to build. And there are some who believe that this could be a huge catalyst for gold and silver if it does come out that Germany does not have the gold that they think they do.
They believe it's been stolen, leased out, and it's not there anymore. And the United States may be in exactly the same situation as our other countries. So this is a huge news extravaganza. And again, I read it over the last couple of days. And again, it's 100% correct. If that gold is not there, if it's been stolen or leased or moved or taken or whatever, it will cause the price of gold to go ballistic because it will take off such a massive amount of gold on the market. So, again, there's things going on behind the scenes that just don't make a lot of sense. When you've got governments in the trouble that they're in, all of a sudden things happen because they're the government. They can do whatever they want. And, the fact is it's very difficult to fight City Hall, as the old saying goes. So I've read those articles, and again, there's tremendous concern because it's come up more than one time. So I guess we are going to find out fairly soon if there is that gold being held for Germany? And if there isn't, boy, I would not want to be in the central bank's shoes when that hits the you-know-what.
Very, very true. Connect with Worldwide Precious Metals. I know they're up to date on this German gold situation. They'll keep you apprised of what's happening and their thoughts. We will as well. www.pmc.com to connect with them. 1-866-623-2002. If you're in Calgary, they'll be in Calgary the week of November the 12th. Sit down with them for a meet and greet. RareColoredDiamonds.com is Harold's website. 1-800-432-1022 is his telephone number. We have about 30 seconds left here. Should mention this weekend the clocks go back 1 hour, fall back 1 hour, so keep that in mind as you listen to us. And Harold, Hurricane Sandy, it's going to be very devastating for the U.S. economy. The election next week, I think it's been very, very quiet leading up to the election, but once we have this election and the fiscal cliff has to be dealt with, I think all hell is going to break loose in the United States. And depending on how the vote goes, you could see chaos. We have about 30 seconds left.
Yeah, I'm with you on that, Randy. I think you're 100% right. Our hearts go out to everybody in the northeastern part of the U.S. that was affected by Hurricane Sandy. It's a horrible thing, and the weather and everything is just causing these poor people to suffer so much. I want to thank everybody for listening to our radio show. I want to wish you all a wonderful weekend and a very, very profitable day.
Speak with Harold, RareColoredDiamonds.com, telephone number 1-800-432-1022. Worldwide Precious Metals, www.pmc.com, 1-866-623-2002. Don't forget, next week in Calgary, we are on at 11 a.m. on Sunday. Here in Edmonton, we are not sure yet. We will let you know. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.